Welcome to Get Serious. Excited to be jumping back into this one today. So I just wanted to remark on, how creative you should be with deal structuring, especially in an environment like this. So to elaborate further here, we just see this industry changing so rapidly, and it's difficult to acquire, difficult to sell. Like, a lot of land investors are stuck in between those two places. And I think I saw Seth and Neil Clements talk the other day too, where I don't know exactly where they got their data from, but it kind of rings true just from an anecdotal uh, viewing of the industry, where like 40 some odd percent of land investors are just out of the industry since the heyday of 2020, 2022, roughly, which is just not surprising. Like, it's just tougher to operate, and you just got to be smarter, and again, more creative to compete at a higher operational level. So as the industry has evolved, I think it's tricky and limits your business inherently to like only be looking at one particular type of deal, whether that's just like purely flips. You can have different product lines, or transactional deal, double closes, subdivides, entitlements, what have you. And I'm careful to recommend that until you really nailed one, but like as soon as you operationalize one, like it can make sense to expand your potential offerings and what you go after as you get more experienced, and you can be a little bit more creative with your structuring. So you can work with more leads that come your way, given how difficult it is to both get leads in the first place and convert them in today's market. And so with that in mind, our typical setup has been looking for properties with roughly 2x conservative gross margin. I mean, pretty standard for the land industry. And we still find that. We have been, we just closed another deal today on the sell side, rather, that had margin like that. It can be difficult if you're just purely looking for those type of deals. And so, as long as you're aligned on a risk perspective, you can take a look at other ways to make the leads coming your way still work for you, whether it's through like a funding type setup like we do, or if you're just direct marketing out, or a combination thereof. And I know I've talked about some of our difficulties with transactional deals, and we got out of a deal that went haywire, and we still ended up making like pretty considerable profit on it net, though it was just, from a mental perspective, like it was so painful to go through that. But now, like, we're open to doing transactional deals again. It's just we have an updated process to where we basically have to consider them from a full DD perspective prior to deciding to pull the trigger or not. And a number of other folks have sent or are planning to send additional transactional deals, some like pretty sizable checks. And I think that's only going to grow over the future, because it's another podcast, but I was talking with another very high level operator within land, and see the writing on the wall. Double closes are just facing a higher regulatory burden, and it's really only heading in that direction. So it could very much be a realistic possibility that like over the next 2 to 3 years ish, double closes just might not be a viable option across like much of the country, especially most of the flipping states. And that like applies to household wholesalers as well as land. I think it's just, there were a lot of bad actors that, gave the industry a bad name. And I'm like not that opposed to that happening. It's like, it's better for our business anyway. And I think, just for sellers, I just think, again, that there's so many people who overpromise and say they can double close, sell a property, but they have no idea how to price on the bet. So they waste everybody's time. They mess up the market. They waste the seller's time. It disturbs the dispo market anyway, because people have unrealistic expectation of pricing, and it just bumps comps higher than they need to be. The whole thing done properly, yeah, it's an effective strategy, but the bad apples, I think, just make it worse for everybody. Tangent aside there, that's just something to keep in mind. And so, even if double closes might still be possible from, lining up a buyer, you'll need to be able to take title to the property instead of just, running the the typical wholesale double close model, where there's no title transfer to the middleman entity. So, we're trying to, maintain our footprint within that product line as well. And then another one, again, we're just, more open to things that are on market, or, larger properties that are off market or potentially going to head on market in certain areas that we like, where there's a potential for a minor subdivide or some type of value add where we can still get our 2x margin on the deal. Like this deal in North Carolina that we just sold earlier today, like I just want to keep building the relationships with the realtors that we have and say, hey, like you guys get any type of on-market property or, somebody who's off market but thinking about selling their land. And, we can do minor subdivide, value add type work, $50K min purchase price, upwards of $1 million-ish. You can send it our way and we'll take it down. You get commission on both sides, we list with you, do the value add, etc. That's something we're very interested in. Or another strategy that I've heard more recently, again, from one of the better operators within the industry, is like, even if that 2x margin isn't available, which is just, it's rare, but it's still out there, like to be more creative, you can engage in a partnership with the seller. Again, this is not like a brand new strategy. It's just a different flavor on top of it, and utilizing it more strategically to where you're not taking the property down in and of itself, but you're willing to put cash down to do some value add on the property. And so the seller still gets paid the number that they're looking for, but we bump the potential margin on the exit pricing of the underlying parent parcel or possible child parcels to where we would be able to retain some of that margin compared to what an undeveloped or not improved parcel might have gotten on the market. And so then we don't need a X margin on the deal because first, the cash burden is just considerably lower to go after. In fact, like you can still get more than 2x gross returns on your capital into the deal, not on an asset level basis, but just on a cash on cash basis. So like you could inject, $10K into doing some value add and get out, potentially 30, 40, something like that, just as an example here. So, cash on cash returns are still very solid, even if on an asset level, the margin is considerably compressed. Hopefully that made sense there. So yeah, your paperwork would still need to be very solid with the seller. So, because you're going to have to put money down as a partnership, but you can, structure it in such a way that if they don't uphold their end of the bargain, you can at least get your money that you put into it out of the deal to break even on the back end. So you can de-risk that, and generally the cash involved in the deal is just going to be considerably less compared if you're doing 6 figures plus outlay taking down an entire asset. So that can open up more avenues to work on leads and properties that might not have as much inherent margin on that, but your cash on cash return can still be very significant and attractive, structured that way. So it just opens up the lead pool even more to work, again, in a pretty difficult market, extremely difficult market, comparative, historically compared. And so, we noted to our realtor partners as well, too. It's like, okay, yeah, you can find us those on market, off market deals that have maybe the 2x margin. If we do value add, we take down the whole thing. Or again, you find other landowners who are willing to partner with value add type folks like us, and can undergo this arrangement. And like the realtor that I told, very experienced folks, great info. They've done stuff like that before. They'd like to scale that out. So find partners who, have these type of leads to where you might not have as much, direct marketing costs associated with it. So, we've built up over the course of years, very solid realtor relationship, especially if you show you know what you're doing in the industry. So lever that and find these win-wins where everybody gets a piece of the pie. The landowner, us, the realtors, that's what you have to do to be creative to win in this industry. Or if other people, land investors bring us deals like that and we can take a piece of the action as well to fund it directly, that can still make a lot of sense as well. So that's just another lead source there. So you just got to expand your thought process to succeed, again, in a difficult market like this. It's again, feel like I'm barely brushing, we've been doing this for a while, and I feel like, again, we're just at the start of our journey to really reach our full potential as a company here. So that's just to give you some ideas. Like if you ever think you're just banging your head against the wall and you just can't get those, have you really exhausted all your options? Again, that's something like Hormozy always said, like, why can't you do more of what you're doing, or variations, different type of sourcing to still get the quality inputs that you need to continue to run your business and take it to the next level. So hopefully that gets the wheels spinning here. There's literally infinite opportunity within real estate, regardless of what the market is like. Already some of these conversations have just been getting started here. I have some other more tactical updates I'll get into in another pod. But again, hopefully this one's helpful. If you have other comments or other, sources that I might not be considering, things you found helpful, please share. Would love to see what you're working on and, potentially learn from and implement within our own business, so I can share even more, vice versa. So with that in mind, seriousland.capital for any of your funding needs, $50K min purchase price, and Land Daily Diligence Facebook group to review your deals. Just got a whole bunch more in. Our website traffic is considerably up over the past month here. So I appreciate the volume coming our way. Continued brand building. It means the world for you guys to be listening and reading any of the content we put out here. We put a lot of effort into it. So hopefully that shows. With that in mind, subscribe and share. Looking forward to next time. Take care, everybody.